Hello everyone, I am Omar Abdaljawad, and for those who do not know me, I am a 16-year-old boy who is striving for my inevitable success, inshallah. So today's video is a new chapter in our self-improvement videos, which we can name the trade analysis. Okay? Now, we're trading or day trading with Forex in particular involves many things at once. Today we're gonna go easy, we're gonna go with the basics. I'm gonna explain to you guys what a trend and how you can identify a trend in a market. Okay? So, how is it gonna work? Now, this is TradingView. This is a platform where you analyze charts, trading charts. And now this might seem a bit, what am I looking at? What is this thing with a bunch of candles or a bunch of squares and rectangles, right? So now let's just go over to a blank screen so I can explain to you how this works. Markets are built upon a price action. They're built upon price movement. What do I mean by that? Like this currency, for example, is basically the GBP and USD, meaning you have the Great British Pound and the United States dollar. What does that mean? They're both called the currency pair. The GBP USD is called the base pair, and the United States dollar is called the quote pair. How does that matter? Because it tells you that 1 GBP is equal to, what's the price right now? 1.3659 USD. Alright, so it's telling you this amount relative to that amount. It gives you the relative amount of this symbol to that symbol. So let's get straight into the price action of the market. The markets have two movements. They either move up in price or they move down in price, right? And based on that, you either buy or you sell. Now, basic identification of a trend involves small steps and small areas that you might focus on. If you want to look at an uptrend, a trend that involves higher highs and higher lows. What does that mean? Higher highs, higher lows, higher highs, higher lows. So this is an example of an uptrend that involves many higher highs and many higher lows. Now, as you all know, higher highs and higher lows are called point of structures. This is called the point of structure. Okay, all these areas, all these curves are called points of structures. So in trading anyway, oh no, my bad guys. In trading anyway, you don't have something like this. You cannot have a price action that goes up like this. That is almost impossible. You must have something called a retest. Something called a retest for the price to retest its zone and continue back up or go down or whatever you want to call it, so it can create a higher low. So the market will go up and then it's gonna go down to form something called a low. Right? We still don't know whether it's a higher low or a lower low. We still don't know, but we know based on the next higher high. So this is pointed right here as common logic says. This is a high, and this is a low. Right? So when we're in an uptrend, we're forming higher highs. As you can see, this high is higher than this high. We're forming higher lows, so this low is higher than that high, and so on and so forth. As long as we remain in the trend where we have higher highs and higher lows, we are still in a bullish market. Now, bearish market involves lower lows and lower highs, lower lows and lower highs, lower lows and lower highs, so on and so forth. So, نفس الشيء, same exact format. In the bearish, you also have points of structure, which are these. We call them highs or lows. These are highs and these are lows. Now, in the case of a bearish trend, meaning a trend that is a downtrend, a trend that is going down in price, you have lower highs and lower lows. As you can notice, here's the high, here's the next high, so it's lower than the high. That meaning you have a lower high, lower low, lower high, lower low. So as long as you remain going lower highs and lower lows, you are still in a bearish trend, right? Let me show you an example of that in a chart. As you can notice, here, there's a strong bullish trend. As you can notice in this chart here, look, we're forming higher highs and higher lows. So this, oh no, sorry guys. So this point on, we notice we made higher highs and higher lows, right? So this, in this part of the trend, this part right here technically counts as a bullish or an uptrend. Okay, that is simply trend. That's simply trend analysis. You can either look at the price going up, meaning forming higher highs and higher lows, or the price going down, forming lower highs and lower lows. A price that has higher highs, higher lows is a bullish, meaning it's an uptrend. A price that has lower lows and lower highs is a bearish, meaning it's a downtrend. Watch future videos so you can identify areas where you can know whether this market is going to be bullish or bearish, or sometimes even in trading, by the way, you're going to find areas of interest, areas in which you can tell whether the market will continue up or continue down, such as support and resistance, supply and demand. There are so many areas you can use to identify the price action. right? This was just a basic explanation of the trend of a market, whether it could go up or down, what are the components of an uptrend and a downtrend. And if you continue watching this chapter or this full-on playlist, you're gonna identify more ideas regarding trading, and I hope you guys benefit out of this. Obviously, if you have any questions, please don't forget to comment or message me. I will always reply, inshallah. So please don't forget to subscribe and follow me on Instagram. See you guys later. Bye bye.